Hello, I'm Patrick Manzi, Chief Economist with the National Automobile Dealers Association, here to give you a recap of what happened in the auto industry in 2022 and an outlook for what we expect in 2023. New light vehicle sales in 2022 totaled 13.7 million units, down about 8% or so compared to 2021. Now, despite these lower volumes, the average dealer and the average OEM had another very good year in 2022. Now, below the surface on those numbers, we saw a few trends. Light trucks represented a little over 79% of the total market, up slightly from last year, and crossovers once again were the most popular segment, representing 45% of all the new vehicles sold. Now, powertrain shifts are happening across the auto industry as well, and sales of alternative fuel vehicles had their highest market share to date. Alternative fuel vehicles represented 12.3% of all new vehicles sold, and that includes hybrids, plug-in hybrids, and battery electric vehicles. Now, battery electric vehicles specifically had their best market share year ever, at 5.4% of all new vehicles sold, and this is up from 3.1% in 2021. In 2022, sales of battery electric vehicles by franchise dealers nearly topped 260,000 units. This was up 92% year over year. Franchise dealers currently control about 35% of the battery electric vehicle market, and we expect that over the next few years, as more and more models come out from the legacy OEMs, that franchise dealers will continue to capture more and more of this market. Perhaps the biggest story in the automotive industry for the last few years has been new vehicle inventory. New vehicle inventory on the ground and in transit into 2022 with just under 1.7 million units. This is up about 49% from the start of the year, when inventory was about at 1.1 million units. Now, throughout the year, because of the tight inventory levels, OEMs have prioritized builds of higher trimmed and more expensive vehicles, namely pickups and SUVs. And certainly those make up the lion's share of that inventory out there right now. They have the largest days supply, and the industry-wide current day supply is about 36 days. Because of those OEM production decisions and OEMs deciding to roll back on incentive spending, we saw average transaction prices rise throughout the year. At the end of December, J.D. Power expects that the average new vehicle transaction price is going to total $46,300. Additionally, average incentive spending per unit did tick up slightly in December and is forecast to be $1,187. Now, this is the second month above $1,000 per unit, following 6 straight months of sub $1,000 per unit incentive spending. We expect that incentive spending will slowly recover as inventory recovers throughout 2023. The Fed hiked interest rates 7 times in 2022, and 4 of those hikes were 75 basis point increases. Now, these higher rates and more expensive vehicles, of course, have translated into higher monthly payments for consumers. And J.D. Power expects that the average monthly payment on a new vehicle finance contract in December 2022 is going to total $718. According to Ward's Intelligence, new light vehicle production in North America is expected to total 14.2 million units in 2022. This would be a nice solid improvement compared to 2021, and we do expect that production is only going to continue to improve in 2023. Now let's briefly discuss some of the key macroeconomic variables that we're following here at NADA. In 2022, the U.S. labor market added 4.5 million jobs, one of the best years for job gains on record, and just behind 2021's 6.2 million jobs year that we saw last year. Now, in December specifically, the U.S. labor market added 223,000 jobs. Current readings on initial jobless claims still remain very low and steady and have shown no signs of spiking, despite layoffs in some very visible sectors such as the tech sector. We expect that we'll see probably 3 25 basis point hikes in the first half of 2023, bringing the terminal range on the federal funds rate to a range of 5% to 5.25%. This is going to push rates on auto finance contracts even higher in the first half of the year. Now, the main reason the Fed has been increasing rates so drastically throughout 2022 is because we've seen very high rates of inflation throughout the year. The most recent reading of this consumer price index in November showed an increase of 7.1% year over year. And when you strip away those more volatile food and energy prices to get to the so-called core rate, that has fallen to around 6%. And the current reading from the Federal Reserve Bank of Atlanta's GDP Now index shows that growth should increase in the fourth quarter by 3.9%. When you add all that up, we expect that real GDP growth for 2022 is going to total 1.9%. And then when we move ahead into 2023, we do expect that growth is going to slow, but still remain somewhat positive. Our current forecast for real GDP growth in 2023 is a range of flat growth to 0.5 percentage point of growth. So as we start the year, the economy is still in a very good position, and there are some risks. But looking ahead to the rest of the year, specifically for the new and used vehicle market, I expect that America's franchise dealers are going to have another really great year, and new vehicle sales should continue to improve throughout the year. I hope to see all of you at the NADA show in Dallas, January 26th through 29th. I'll be doing a special live stage presentation on Saturday morning, and I hope to see you all there. Thank you.